Hello and welcome to the trade setup. In this video, we're looking at Uranium Energy. It is time for another update, and the structure that we didn't want to see form in the previous video seems to already be in place now, and it's not yet complete, but it seems determined to finish this idea of an initial 5-way move to the downside, which would have quite bearish implications. Now, of course, it might turn into something else. It can be still salvageable, as long as we still hold the levels of support, but it is going into a very difficult spot where we might need to be prepared for a more substantial top to already be in place. Now, before we get into all those details, all the levels of resistance, of support to watch, I would like to go quickly through the larger time frame for any of you who might be new. And here on this chart, we have been tracking this idea of a series of 1-2 setups where ideally we would have liked to see a third wave unfold. Now, the thing is, with this wave 3, we have failed to create an impulse within this area. And while technically it can be still salvaged by forming another larger 1-2 setup, I don't necessarily see it likely to work out within an internal extension and to form a wave 3 in a more direct fashion. Now sure, if we form the 1-2 setup, I will be looking for an area of support for continuation to higher prices, but at the same time, by forming this movement to the upside, by completing it, we allow this chart to have an even larger pattern complete. Because within this wave 1 to the upside, it could have been technically complete here, but this could be also an extension of that wave. In such a scenario, we would need to be prepared for an even larger wave 2 correction, and in either case, we would expect a quite substantial descent, at least into the internal area of support for an internal wave 2, but potentially much lower. Now, in either case, we are still looking for potential continuation to higher prices internally within this wave to the upside, as within this pattern we have been tracking this idea of a diagonal movement, a diagonal pattern to the upside to form. And here we have had a 1-2 setup, a third wave up, a fourth wave down, where we had a great area of accumulation for every single viewer of this channel, and a fifth wave that we were tracking to form to the upside. Within this wave 5, we were looking for the price to reach around the $20 level. We already achieved that. Now, the thing is, we don't have necessarily a full count. I would actually prefer to still push to higher prices based on the pattern that we have within this area, because I'm looking to build an A, B, C structure, and within this wave C, I lack a complete structure. Yeah, within the wave C, we only have the wave 1, 2, and 3 complete. We were looking for a wave 4 correction and extension to another high at the very least in a fifth wave, where sure, at that point we could have been looking for even additional extensions to higher prices, but we would have been able to track a full count and we didn't need this pattern to extend even higher after that. At this point, still I'm looking for continuation to higher prices, although based on the internal structure that we were tracking in this area in the previous videos, we were looking, actually let me remove this internal count. We were looking for a potential initial 5-way move to the downside within this yellow interpretation. We had already completed our A, B, C structure in this area in the previous video, and we were watching the levels of resistance between the $17 all the way up to the $18.5. We have pushed pretty much perfectly into the 50% retracement. We have overlap with the wave 1, which classic Elliott wave theory considers a must for a diagonal pattern to be able to be tracked within this area. And we are looking at another low. We are looking at a potential fifth wave to form within this area. Now the thing is, at this point, I cannot really consider that this fifth wave is complete, because in this movement, in this decline we have had yesterday, basically, we have formed a 5-wave pattern. We have formed basically an impulse within this area. So we would still require another low. But the thing is, if we build this additional low in the fifth wave, we would have our initial 5-wave move to the downside within a leading diagonal. This would suggest that after a 3-wave correction into the area of resistance that we will track once it is complete, we would expect at the very least another 5-wave move to the downside. This would imply us breaking the area of support, most likely, that we have here down to the $14.4 level at the 61.8% retracement. If we break that area, we will not be able to reliably track extensions to even higher prices. Even if I wanted to look, let's say, for this to be instead a leading diagonal in a wave A in a 1, 2, 3rd, 4th, and 5th, I could not adjust this area of support much. I could allow it to maybe go down to the $14.2 level, but nothing significant really, nothing that would really substantially change in terms of our expectations. Now, at the same time, while we still only have a 5-wave move within this area, I do not have a full count in this structure. I could technically still consider this to be something like a WXY pattern, in which case I would track this as an ABC pattern and I could still be looking for a 5th wave to the upside to work out. But if we get another low in this 5th wave, which based on the pre-market pricing seems very likely, I would be prepared for this structure not to manage to extend to even higher prices afterwards. Ever since we topped within this wave 3, we had the last level of support here at the $14.4 level. I would not be able to extend this into a reliable structure anymore, and definitely we would be able to look for other possible extensions to higher prices, but I would be prepared to consider a more substantial top to be in place and to have started our larger wave 2 correction. Yeah, either one of them. Now, if we are to still recover during the pre-market, let's say, and hold the current low that we have two options to track for a substantial bottom to be in place. Firstly, I would be watching the potential ABC pattern that we could track in this 5th wave in yellow. I would be watching for this, the levels between the $16.3 all the way up to the $17.4. A break above the 78.6% retracement would aid us in shifting the probabilities for a more substantial bottom to already be in place. We would still need to break above the beginning of this wave 5 to completely, or let's say of this wave A, to completely invalidate the idea of an extension within this pattern, but a break of the 78.6% retracement would be a good first sign. Secondly, if we break that level, I would still need to see a break of the larger area of resistance for the idea of an extension of this wave 3 in an ABC structure. In this case, we would need to adjust the area of resistance at the levels between the $16.3 all the way up to the $18.2. If we manage to also break here the $18.2, we would have a more substantial bottom in place. Very likely, we would not be looking for this to extend in an initial 5-wave move to the downside. But all of this actually depends on us breaking the area of resistance before forming here our wave C within this ABC pattern, which again already seems to be in play. It already seems to be forming the wave C. I do not know how much of a chance we actually stand in salvaging this from turning into a 5-wave pattern. Now, keep in mind, in the end, these structures do have distortions. We might even have a truncation here within a 5th wave. We would still be able to look for continuation to higher prices in a 5th wave as long as we hold the area of support. We don't absolutely must extend to lower prices if we have our initial 5-wave move to the downside, but it would be a strong signal, it would be a strong indication that we should be careful, that we should be considering to prepare for such a case, for such a scenario. And as always, it is best to focus on the levels of support, not the exact count. And for this, we are watching the $14.4 level. If you want to allow an even lower extension, you can look for the $14.2 level. But ultimately, if I see a sustained break below these levels of support, I would be inclined to believe a more substantial top is already in place. And I want to remind you, once again, we will be able to track continuation to higher prices afterwards, but we will need an internal structure to suggest such a pattern occurring. We will not have a reliable structure to follow in continuation to higher prices below the 61.8% retracement. But yeah, For now, these are the levels, this is the trade setup. I hope you enjoyed the video, and if you did, don't forget to subscribe and let me know what else you want me to cover, and I'll do my best to do that in the days and weeks ahead. And until then, I hope you have a nice day, and I hope to see you in the next video. Bye bye.